Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, director of research for digital assets over at Forbes Crypto. We're going to discuss a development this week with Goldman Sachs completing a crypto OTC trade. And Steven, before we get into that, let's talk about the crypto market overall. It seems to remain buoyant despite the first rate increase and fears of a more accelerating tightening schedule. Why do you think this is happening?
Yeah, thanks, Jill, and thanks for having me back. It's crypto has sort of defied convention so far over the last week or so. As you mentioned last week, the Fed announced its first rate increase in more than 4 years of just 25 basis points, but it was signaled to be the first of what will be 6 more throughout the rest of the year, and that was all designed to combat record levels of inflation, which are up 7.9% year on year, the highest in 40 years. Crypto, though, Bitcoin, Ether, other assets actually kind of took it in stride. I think mostly because people almost took a bit of comfort in the fact that rate increases were not higher. But that said, then just yesterday, in response to some questions at an appearance, Fed Chairman Jerome Powell suggested that the Fed may actually double its next rate increase to 50 basis points in May, and then again subsequently in the following meeting later in the summer. And even still, despite the fact that these rate increases, which would have the expected effect of lowering the economy or reducing the economy, slowing down the economy, reducing inflation, crypto still went up. Right now, the total market cap for all crypto assets is above $2 trillion, which is the highest that it's been since early February when the Winter Olympics were still going on. Bitcoin is sitting comfortably around $42,000, a little bit higher than that. Ether, the native asset for the Ethereum blockchain, is above $3,000 for the first time in a while. And as one additional sign that many crypto investors are taking additional risk on to their portfolios, those base assets are being outperformed by many major altcoins, because in crypto parlance, Bitcoin and Ether tend to be the safer, more conservative assets. So despite some of these issues and the ongoing uncertainty related to Ukraine, COVID, inflation, et cetera, crypto investors are at least feeling a little bit bullish for right now.
Right. And Goldman Sachs completed a crypto OTC trade, which is pretty significant for the institutional space. That could lend to some of this as well. Explain to the audience what it means and why it matters.
Great. So Goldman Sachs in some ways has been sort of the white whale for crypto investors. I mean, they kind of teased us a few years ago when they launched or announced the launch of an expected launch of a crypto trading desk in response to client demand. But this kind of coincided with the ICO boom in 2017, 2018, and then it ended up not materializing. Slowly under the surface, Goldman has been offering some crypto exposure to clients through the offering access to crypto derivative products traded at the Chicago Mercantile Exchange. They offered exposure to an Ether closed-end fund through an investment bank based out of Canada called Galaxy Digital, which is run by Mike Novogratz, former Goldman guy. And then, as you mentioned, just this week it was announced that they completed an OTC trade for a non-deliverable Bitcoin option, and that's a very fancy term for essentially a Bitcoin trade that was settled in cash, not the physical delivery of Bitcoin, but it's done over the counter because these OTC trades are typically very high dollar amounts, and they are purposely traded away from these centralized clearinghouses so that they don't necessarily move the spot market. So this is a big moment. It's the first major Wall Street bank to engage in such an activity. I expect it to not be the last. And something else I think that below the radar that I think a lot of people might get excited about is the fact that if banks like Goldman start trading and getting even more client exposure to crypto, that institutional knowledge is then going to feed into all their other analysts. So when they look at Bitcoin stocks and other types of securities that offer even indirect or tangential exposure to crypto, that's going to lead to more rigorous analysis on that end as well. So I think there's many different reasons to get excited about this trade.
You know, Steven, it's interesting. Last week, we had Edelman on the show with a crypto regulatory survey. And I believe the number was 44% of respondents would be more comfortable getting involved with crypto if it was offered through their bank or something that they were a little bit more familiar with. So it's interesting that you're correlating the fact that a major Wall Street bank like Goldman Sachs is now helping to facilitate these transactions. So it says, kind of correlates with what the survey is saying as well. In light of the Ukraine crisis, there's a lot of talk about Bitcoin becoming a national security asset. What does this mean, and do you think it could come to fruition?
Right. So, I mean, I think the big lessons learned, although it's not really a lesson for people that have been following the issue closely, is the fact that because the U.S. controls the U.S. dollar, which is the world's global reserve currency and sort of the dominant currency in the entire global financial system, that's a pretty significant liability for countries at risk of sanctions. I mean, Russia in particular has $630 billion in its central bank reserves. It doesn't have access to most of it because it's being shut down by countries that don't want to risk losing access to the U.S. financial system. A big worry then became, will these oligarchs, will ordinary Russians, will people trying to evade sanctions turn to Bitcoin, turn to crypto as a way to sort of disentangle itself from SWIFT and the U.S. financial system? I mean, we're talking about other native payment systems in Russia and China, and so far no one has really been able to dethrone SWIFT or dethrone the U.S. dollar, although most people think, myself included, think it's inevitable that the dollar will cease being the world's financial reserve asset at some point in the future. But regardless, a lot of people are worried about crypto. And I think one thing that's been proven is the fact that because blockchains are traceable and there's some terrific crypto forensic firms out there, it's going to be hard to launder money, especially large amounts of it, through crypto. But at the same time, it would not surprise me for various countries to try to find a way to build up their Bitcoin capabilities to get assets and potentially try to use it as a way to disentangle itself from the US. The good news is that if that is actually going to happen, because of the major mining exodus out of China last spring, when China essentially banned all miners, the US is now the #1 epicenter of all Bitcoin mining. It doesn't control a majority of the Bitcoin hash rate or the computing power, because that would in some ways perhaps make the network itself insecure and make people around the world lose trust in it, but they do control a large amount of it. So if Bitcoin itself is going to become a major world reserve asset, a major world reserve currency, if its volatility ever dampens, at least the US is in a good position to help set certain standards for how this is going to move in the future.
And finally, here, how are rising energy prices impacting the mining market?
Yeah, so this is an issue that I've been following very closely. I mean, as the price of a gallon of oil has gone past $100, $130, so on and so forth. I mean, mining has become a very competitive industry. It's already very energy intensive, which we've spoken about many times, Jill, and you've documented on your show and in my writing. And we are starting to see some signs of mining capitulation, in the sense that with energy prices going up so high, it's miners are losing money when they operate their machines to try to make Bitcoin. That means that the revenue they get from getting their Bitcoin is not enough to pay the expenses of owning the equipment and operating them. For instance, we saw the Bitcoin's difficulty rate drop for the second week in a row after several weeks of increases. So that's one issue to keep an eye on, although I don't think it's going to meaningfully affect the security or hash rate of the network in and of itself. But the other thing to watch too is the geopolitical implications of this. Like, for instance, Russia was one of the biggest beneficiaries of that Chinese mining exodus that I had mentioned. Now, I've reached out to some contacts in Russia to see if in any way they have been impacted by this crisis. In some ways, in kind of a perverse sense, their mining costs might go down if potentially there's I think a blockade on Russian energy. But one thing worth keeping in mind is that many Russian mining companies don't run their own machines. They host machines for other people, where essentially people pay rent and energy for these Russian companies to operate their machines in areas with cheap hydroelectric power or other geothermal power sources, and those could be at a risk of nationalization, or at some point companies may start thinking twice about putting machines in Russia if they're worried about the future trajectory of this conflict and those sanctions. So all in all, I think I haven't seen a major impact on the mining industry. But if we start seeing, if this conflict goes on, if the sanctions persist, I could see Russia losing its status as one of the bigger mining centers in the world.
Yeah, interesting. Almost like a modern day utility, isn't it, Stephen? All right. We appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Joe.